Today, I'll walk you through the realities of trading based on your account size, career stage, and risk tolerance. Whether you're trading on the side, running a business, or already financially independent, this framework is to help you decide if active trading is the right move or if you should take a different approach. If you've ever wondered whether trading is a smart decision or just an expensive distraction, this video is for you. Not all trading styles are created equal, and not everyone should be trading in the first place. If you're trying to fit trading into your life, the real question isn't just what's my strategy, it's does this actually make sense for me? Let's be honest, trading isn't the best use of capital for everyone. The biggest mistake I see, people thinking they can turn a small account into life-changing amounts of money. It just doesn't work like that. Here's how to think about it based on your account size. If you have less than 30 grand, you shouldn't be trading yet. I know that's not what people want to hear, but the reality is, with a small account, the math just is not in your favor. Even if you're an amazing trader, turning 10K into real wealth is incredibly difficult and risky. Instead, you should focus on increasing your income first. The best investment you can make at this stage isn't the market, it's your earning potential. If you have 50 grand to 100 grand, now you have some flexibility, but you still need to start small. The key here is automation, systems that reduce the emotional decision making and let you focus on growing your wealth elsewhere, rather than trying to scalp the market or focus on strategies that align with your schedule to take advantage of risk to reward setups that make sense at the level you are at. Focus on back-tested trades on indexes and carry little to no overnight risk so you can easily manage your risk and pay attention when your positions are live. If you have over $500,000 or a very high income job, at this stage, the game changes. Trading isn't just about chasing big wins, it's about capital efficiency, tax strategy, and scalability. This is when you should be looking at structures and investment strategies and working with professionals, treating your trading like a business and ensuring your money is being deployed in the most effective way possible and protecting against all risk. For most people, especially high-income professionals, trading should not be about capital efficiency and chasing big wins. The smartest move is structuring your investments so that your money is working for you in the most efficient way possible that fits your life and your goals. Let's talk about how trading fits into different lifestyles. Whether you're working full-time, running a business, or already financially independent, there's a smart way and a not-so-smart way to approach the market. If you're a side hustle trader, you have limited time. If you're balancing a job and trading, your biggest challenge is time. The mistake most side hustle traders make, trying to day trade while working, constantly checking charts, and letting the market distract them from their primary source of income. That's a losing game. I know this firsthand because before I was a hedge fund manager, I was a full-time construction worker who developed a passion for trading. I saw it as a path to building wealth, but getting there wasn't easy. I made sacrifices that less than 1% of people are willing to make. Every spare moment I had went into studying the markets on my lunch breaks, in the evening, and on weekends. When I got laid off during COVID, I became an Uber driver just to keep money coming in so I could focus on trading full-time. But the truth is, I had to eat shit several times before I finally dialed it in. I didn't hang out with friends, I didn't date, and I wasn't looking for a romantic partnership. I didn't drink alcohol so my mind could always stay in peak performance. I went all in on learning the craft. And the reality is, most people aren't wired that way, nor should they be. The level of sacrifice isn't sustainable for most. Instead, keep it structured. Trading things like 0DT options allow you to execute trades before or after work and in between time without requiring you to sit in front of a screen all day. When you use automated orders like stop loss, take profits, and automation of back-tested trades, it makes it very easy to execute everything and stick to one trade at a time, not taking your focus away all day. If you have a solid career and find that trading is emotionally draining or affecting your performance at work, you're likely better off focusing on your job and investing passively instead. If you own a business, your time is already your most valuable asset. The best trading strategies for you are ones that grow your capital without demanding too much of your attention. If you own a business, your trading strategy needs to complement, not compete with your income. The best play, capital efficient strategies that are also time efficient that grow your wealth without pulling your focus away from your business. The best way to do this, only focusing on market ETFs and index funds to trade options with. This lets you create consistent income and eliminate large drawdowns. Diversifying your portfolio. Accessing multiple asset classes reduces exposure, and using tax advantage accounts also ensures you're maximizing your returns for capital efficiency, and you can deploy your assets in multiple ways through those accounts. The best move for mini business owners: allocating your capital to professional management while keeping a portfolio in strategic investments and using your time to better develop your knowledge of evaluating investments. Your time is better spent scaling your business. Consider investing in 3 buckets: your risk/growth bucket, your safety/security bucket, and your alternative assets bucket, or something you're looking at to get more detail on. The goal of all of these income sources is that income is the outcome and that the returns flow into your dream/freedom bucket over time. If you're trading full time, you don't have a safety net. This is your income, which means you need a system. The worst mistake full-time traders make: relying on a single strategy without diversification. You need to treat this like a business and have multiple sources of income from different trades that create an all-weather type of portfolio. Your focus should be on quarterly income trades in instruments like 0DT or intraday plays that diversify your strategies to include both short-term and long-term positions with different risk rewards. The key to success isn't just picking trades, it's managing risk and ensuring consistent profitability over time. Full-time trading isn't about hitting home runs. It's about building a repeatable, structured system that can withstand market fluctuations. If you have a high-paying full-time job, paying you over 250 grand a year, your focus should not be on trying to squeeze in trades between meetings. It should be on maximizing your capital through tax-efficient strategies and other types of investments only available to accredited investors. The biggest mistake I see professionals make: trading in taxable accounts without considering their impact on their long-term wealth. Instead, consider trading in tax-deferred accounts like IRAs or 401ks, which can shield profits from immediate taxation and better enable those to compound over time. If you want to be more active in trading markets but don't have the time to manage the trades yourself, consider automating trades or outsourcing to a professional who can execute strategies on your behalf. And if you already have a stock portfolio, purchasing option-based ETFs allow you to generate passive income while still maintaining ownership over your investment. At this stage, your focus should be on capital preservation and efficiency, not treating trades like a second job. For many professionals, working with a hedge fund or wealth planner can help you optimize your returns while still keeping complete control over your time and mental energy and having your focus where it matters most: in your career. If you're retired or financially independent, your number one goal is preserving capital while generating a steady income. This means avoiding unnecessary risk and focusing on proven, stable strategies. Your priority is steady income and capital preservation. Trading should enhance, not jeopardize, your financial security. Maintaining strong cash positions help limit exposure to you in the marketplace, and if you prefer a completely hands-off approach, allocating funds to hedge funds or managed accounts can give you the exposure to sophisticated strategies that optimize risk-adjusted returns. When you've built wealth, the focus shouldn't be on trying to aggressively grow it through high-risk trading. Instead, smart allocation and professional management can help you protect and grow your assets effectively. The best traders aren't just good at executing trades, they're good at knowing when not to trade. For most high net worth individuals, the real game isn't beating the market every day, it's structuring your capital in the most efficient and scalable way. This provides consistent income without drawdowns. If you want to see how professional hedge fund strategies, check out more of my videos, and if you found this video helpful, hit like, subscribe, and let's keep the conversation going. I know from experience, I stepped through all of these steps, from going from below a 30 grand account and figuring out how to make money at work to eventually scaling up to 8 figures and trading full-time for income. If you want to learn more about my journey, I'm sharing along the way on my YouTube channel with all the strategies and thoughts behind it. Like, comment, subscribe below. Appreciate you guys.